The 2024 election is upon us, and for most of us, it's probably taking up a lot of your attention at the moment. On this channel, we discuss investing and focus on stock analysis, and a president's policies can have real impacts on businesses, the economy, and ultimately stock market valuations. However, we are in a very emotional, divisive, and high-energy time. You have people saying Kamala Harris, if she wins, she'll crash the stock market, and you even have similar arguments that Donald Trump would crash the stock market from his tariff policy. But with this video, I'm going to take a step back and do a big picture look about how the presidential election will impact the stock market and how it should impact your investing strategy. So in today's video, I'm going to share some insight of how the greatest investors of all time deal with presidential elections and how it impacts their investing strategy. Then I'm going to share some data about how markets have performed under various presidents. I'll do a very surface level look at both Trump and Kamala Harris's economic policies. And by the way, I'm going to try my best to make this not a political video. I definitely have my own strong political views, but I'm not aiming to make this a campaign speech or campaign stump. But if you're interested, I would suggest sticking around to the end because I am going to analyze the polls and kind of give my prediction of who I think is going to win the 2024 election. And finally, I'll provide my investing plan. So with that said, let's roll the intro. My name is Zach, this is Dividend Data, and you should leave a like and subscribe to the channel if you enjoy the video. I want to start this off with playing a clip of Warren Buffett, who I would consider the greatest investor of all time. And the reason why this is important is that he has lived throughout so many different presidencies, so he has a very interesting view of how you should let this impact your investing philosophy and strategy. Let's play the clip.
I've lived under 15 presidents. 14 of them I've invested under. I didn't invest under Hoover. I was a little young then. But 7 were Republicans, 7 were Democrats. I mean, after this last election in 2016, most of my friends were for Hillary, and they thought, sell stocks, dig a cave, do whatever it might be. And I told them they're crazy. You do not want to have a political view in investing. And most people put it through a political prism. They just can't keep their politics out of it. They can keep their religion out of it. But politics, they just have to look through those glasses. And if you'd done that, if you'd been a staunch Republican or a staunch Democrat through these 77 years, you'd have missed out on a lot of the party.
This is a very important thing to think about when investing. And the reason why I played this clip is that going into the even election, we all need to be reminded about that very important point. Many of us have very strong political views and definitely have an opinion on whose policies would be better, but you don't want to stop investing or take your money out of the market just because your political candidate doesn't win. The S&P 500 saw gains in 4 of the last 5 presidencies. The only one where it was down was George W. Bush, and that was because he started with the dot-com bubble and ended with the 2008 recession. And of 2-term presidents, Bill Clinton was the best performing, and that was because they did have sizable economic growth in that time, but it might have been slightly inflated towards the end because he did get a lot of those dot-com era gains. And as we all know, that turned into a major bubble. And Obama had massive gains of 175%, but that was from the low starting point of the 2008 recession. So he took over from this massive hole, which definitely skews the data there. And if we look at the recent presidencies, both Donald Trump and Joe Biden, the stock market gained in both. And as we know, our politics are massively divided and people live in entirely different universes politically, but still the stock market grew. Trump ended his first term up 64%, despite the massive pandemic that closed down major aspects of the economy, and the S&P 500 still grew 53% under Joe Biden's term. However, you can argue about inflation lowering the real return of that, which is definitely a thing. And I'm not saying here that being president is unimportant or their policies don't matter, but the real thing that drives the world and the value of the stock market over time is the productivity of human beings and the businesses they create. And ultimately, that is what drives economic growth and the value of the stock market. The stock market itself is the sum of all these various businesses. And the only thing you can do is try to intelligently invest in businesses that are doing well at any time. And the reality is that there will be many businesses, regardless of presidential policies for the most part, there will be many businesses that continue to grow and increase productivity. And it's that growth that will continue to drive up your dividend payments and ultimately drive up the valuation of their stock. And this free market economic engine will continue. And of course, there are very real political implications that could happen from an election, but most of that is outside of any individual's control. As an individual, all you can focus on is intelligently investing your money for the future, increasing your own personal income, and focusing on improving your own financial condition and well-being. As an individual, you have far more control over your well-being than the government does. But obviously, war or nuclear annihilation could be a problem as well that is outside of your control. So regardless of what happens in the election, we all as individuals have to keep chugging along and doing our best. And that's what will happen in the stock market too. All of these businesses will react to the environment that's given to them and focus on improving towards their goals, financial and otherwise. So I hope that helped refocus the big picture of what we're looking at here and how we as individuals can focus on investing and building wealth. But I am really into politics, so I think it will be fun to do a little bit of a prediction segment. Think of this as the Dividend Data Election Special. And by the way, guys, I just put out a new AI tool on dividenddata.com. Think of this as your AI investment research analyst. You can ask any question and it has real-time financial data. You can screen stocks and filter by hundreds of different financial metrics. You can ask it to research any business and it will give you full context with interactive data visualizations. And you can ask very broad questions and see what kind of results it will give you. Perhaps even about a presidential election and how their various policies might impact the market. And I want as many people to try this tool as possible, which is why I'm doing a special launch sale. You can get 50% off both the monthly and annual plan of dividenddata.com. If you sign up via the web app, click your plan and use the promo code AI. That's 2 letters AI, where it says add promotion code on the left-hand side. That'll give you 50% off for life. Or you can click the link in the description and pin comment and sign up for your newsletter. No promo code needed. But I really want as many of you to ask Dividend Data because this really is a great upgrade to dividenddata.com. There's a 30-day money-back guarantee, so no risk in trying it out. I really want to know what you guys think about it. Very excited. But let's continue our election analysis. So I asked Dividend Data what the economic policies of Donald Trump and Kamala Harris would be and how it would impact the stock market. And for Trump, they based a lot of it off of his first term. So they mentioned tax cuts, the Tax Cuts and Jobs Act of 2017. That reduced both corporate and individual tax rates. He also led in deregulation. I believe the stat was that it was 5 times that of any other president, but that's probably because we had a lot more regulations than when a lot of other presidents were around. And then we have his use of tariffs, often for negotiation and protection of American industries. And then for Kamala Harris, it's a little more difficult to actually predict what her policies are because they changed over time. So I think it's best to probably go with what her and Joe Biden have said and done. And I think this is roughly accurate. Tax increases on the wealthy and corporations. And we've talked about this in the past. There was also the proposed unrealized capital gains tax, which is just ridiculous and I don't think will actually happen. And I think even Kamala is realizing that that was not a good suggestion. And other policies would be climate change and green energy. That would be a continuation of the green energy and infrastructure spending from the Inflation Reduction Act. And then we have continuing to support the Affordable Care Act and add a public option, social programs, unions, etc. But here it gave a little bit summary of what the positive impacts and negative impacts could be. So under Donald Trump, positive impacts would be lower corporate tax rates and deregulation can boost corporate profits, potentially leading to higher stock prices. Negative impacts is that trade wars and tariffs can create an uncertainty and possibly disrupt supply chains. And that is a pretty fair analysis. There's positive and negatives to tariff policy. And even if you have more protectionist bent, you can recognize that there may be short-term impacts lowering the earnings of some companies. And based on Harris's policies, positive impacts would be in the green energy and infrastructure sector, basically just more government spending and subsidies. A negative impact would be higher taxes on corporations and the wealthy, reducing corporate profits. And lower profits means lower earnings per share, which could potentially mean lower stock prices. By the way, guys, I'm super deep into politics, so I recognize this is a very surface level look at their various policies. And while we are in this period of uncertainty prior prior to the election, there are many investors making a bet on who will win. And I just saw a very interesting breakdown of this on the BG2 podcast, which is great. You guys should listen to it. It's hosted by Bill Gurley and Brad Gerstner, who are both in venture capital. Pretty good podcast. They have some pretty high level insights. But during the latest episode, they were kind of given a breakdown of a spread trade happening in public markets at the moment. There's a so-called Republican basket and Democrat basket, and those are filled with groups of assets that analysts think will benefit from each candidate's various policies. So in the Republican basket, you have crypto, financials, energy. And in the Democrat basket, you had healthcare, solar, and EVs. And since October 1st, you can see the way that the spread trade went, where the Democrat basket is down over 15%, and the Republican basket's up 10% in that time. So it might be a little interesting just indicator. And another interesting indicator is the political betting markets. So here's Polymarket, for example, and over the past month, Trump took a very significant lead, at one point being up over 30 points. And this is people putting real money as to who they think will win the election. But in the past week, it has gotten closer, and people think it's a coin flip election. And currently we're at a 57.9% chance Trump, 42.3% Kamala. But a lot of this is really just based off of what the polls are showing. So let's actually go look at the polls. Now in the US, we have an electoral college system. So it's all based on you got to win these states, and whoever gets to 270 electoral votes is the winner. And our country is so divided in terms of we have very deep blue regions and very deep red regions. So the whole game is really the battleground states that could flip either way. And currently across the board, Trump is leading in the polls in the battleground states. He's a commanding lead in most of these states, especially when you consider in both of the prior elections that the polls underrepresented the Trump vote. So for example, let's take a look at Michigan, which is a state that Kamala is up by 0.6% in the poll average. During the 2020 election, Biden was up 5.1 points the day prior to the election, and he only ended up winning by 2.8 points. And in 2016, Clinton was up 3.6 points in Michigan, and she actually ended up losing the state by 0.3. And that's just one example. We have the polls in Pennsylvania where Trump's up 0.3 in the polling average. Biden was up 2.6 in the polls, and he ended up winning by 1.2. Clinton was up 2.1 in the polls, and Trump ended up winning the state by 0.7. So it's an interesting political phenomena where Trump ends up overperforming his polling average pretty much every single election cycle. But even with the current polling average, he's up across the board. And based on this, he would win the Electoral College 287 to 251. But the most interesting thing is that he actually has a chance to win the popular vote, which is something that never happens for Republicans. The current polling average shows a tie at 48.5 to 48.5. And the polls that were most accurate in the 2020 and 2016 election, which would be Atlas Intel, they showed Trump up 2 points nationally. And in 2020, Biden was up 6.9 points in the polls this day. That ended up only being 4.5 points. So if I had to put my money on it, which I'm not, but I think the most likely outcome is that Trump will win. But that said, anything can happen in American politics, so who knows? And I'm sure it will be very contentious, which will not be fun to listen to. So that is who I think will win, and I definitely have who I would want to win. But the reality is, me as an individual, I have to focus on improving my own situation regardless of who wins the presidential election. And this is something all of us need to remember and focus on. And this is true on the individual level and for most companies. Whether it's Tesla, Visa, Microsoft, Altria, ExxonMobil, Berkshire Hathaway, Salesforce, Apple, Google, all of these companies are going to be working to improve their earnings and business over the coming years. And many of them will succeed in that. We also have to factor in that there are real productivity increases and technological innovations happening all the time around us. And I know that I've oriented a lot of my portfolio to ride the wave of these advancements in AI and related technology, whether that's through Tesla, Microsoft, Salesforce, Apple, Alphabet, Amazon. We could go on and on. And over the long term, I'm so optimistic about the future. So with that said, let's make dividends great again. See you next time. Subscribe. More videos coming soon.